Recently, SimplySafeDividends released a list of top 25 high dividend stocks yielding 4 to 10%. And in this video, we're going to be going over that. Our main focus is on the stocks that have a safe dividend ranking and have a yield of over 7%. That narrows down the list to only 5 stocks that we will be going through in depth. Let's get into it. The first company to review is Physicians Realty Trust. It's a real estate investment trust REIT with a current dividend yield of 8.1%. This stock is traded with ticker symbol DOC and has a track record of uninterrupted dividend streak of 9 years. Founded in 2011, Physicians Realty Trust owns around 300 medical office buildings in over 30 different states in the US. This company is now merging with Healthpeak, which is available currently with ticker symbol PEAK, in an all-stock transaction, which is expected to close in the first half of 2024. That said, if you own shares of DOC, you will be receiving equivalent of 0.674 of peak shares for each Physicians shares that you owned. After the merger is complete, it will be kind of continuing its business with the name Healthpeak, but under the symbol DOC. According to this article, this is a recession-resistant business because Physicians Realty and Healthpeak generate a stable rental income stream thanks to their long-term triple net leases with tenants such as physicians and healthcare delivery systems, which benefit from an ongoing need for their medical service. On top of that, they have a strong diversified tenant profile, which further reduces their risks. Looking at the current dividend yield for this REIT, it is showing to be at one of the highest levels that it has been over the past 5 years, while it's worthwhile mentioning that this REIT's occupancy rate has consistently remained over 90%, which is quite healthy. The next pick is Enbridge, which is a Canadian business also available in US dollars in terms of investors outside of Canada. Established back in 1949, Enbridge is the largest midstream company in North America with a network of pipelines, terminals, storage facilities, and processing plants connecting the continent's most vital energy producing regions. It has currently a dividend yield of around 7.6% and has an amazing uninterrupted dividend streak of 70 years, which is just remarkable. Enbridge may definitely appeal to high yield investors who believe in the staying power of fossil fuels and the infrastructure necessary to help move them from energy producers to downstream consumers. That said, there are of course some risks to this business, and it's worthwhile mentioning that their September 2023 acquisition of Dominion's gas utilities for $14 billion still doesn't meaningfully change the firm's long-term outlook or dividend growth profile, which is why, based on the ranking on this article, they're still categorized as a safe dividend payer. Next, we have another energy, oil and gas storage and transportation company, Enterprise Products Partners, with ticker symbol EPD. With a current dividend yield of 7.6%, Enterprise Products Partners has an uninterrupted dividend streak of 24 years. It began its kind of operations back in 1968 as a wholesale marketer of natural gas liquids and has expanded since over the decades to become one of the largest master limited partnerships in America. EPD enables many energy producers to enter a single relationship to move their products to downstream buyers. As long as fossil fuels remain an important component of the world's energy mix, Enterprise High Yield should continue to be a good bet for investors who are comfortable with investing in MLPs and can count on the high dividend that this business has been paying for many years. On the fourth spot, we have Verizon. It's communications, wireless, and internet services business with a current dividend yield of 7.4% and an uninterrupted dividend streak of 39 years. Verizon formed in 2000 when Bell Atlantic and GTE merged, creating America's largest wireless company. As for Verizon, historically it has maintained a superior network reliability, speed, and performance, allowing the telecom giant to charge premium rates and enjoy lower churn among its clients. Verizon's high yield reflects the company's more muted subscriber growth in the recent years. The firm has also had to invest heavily in the next generation network technologies such as 5G, resulting in higher debt and uncertain returns as growth opportunities such as 5G, home internet, and higher plan rates remain fuzzy. You'd notice how Verizon's dividend yield of 7.4% is one of the highest that is kind of reached over the past 5 years. In fact, their 5-year average dividend yield is only around 4.5%. On top of that, if you look at their forward price to earnings ratio, they're trading at one of the lowest levels that they have had in the past 5 years, with their 5-year average being at 11 and their current forward price to earnings ratio at 7.9. Lastly, our fifth and final stock to review with a safe dividend ranking and a dividend yield over 7%, we have Main Street Capital, a financials business development company with a dividend yield of 7.2% and an uninterrupted dividend streak of 15 years. Main Street Capital, which is available with ticker symbol MAIN, was founded in Texas back in 1997 and is one of the oldest and largest business development companies, BDCs, in the industry. For those investors who are considering Main Street as their avenue for investments for dividend income, they're gonna have to have some acceptance and tolerance for volatility given the risk associated with this investments in the subprime debt securities. Main Street is arguably one of the most conservative high dividend stocks in the industry, according to this article. You do notice that their current dividend yield is hovering very much close to their 5-year average, slightly higher than that. Their 5-year average dividend yield was at 6.42%, and their current dividend yield is hovering close to that 7.2%. Moreover, as for their price to earnings ratio, their forward PE is at 10.2, which is lower than their average over the past 5 years, showing to be at 15. In case you were interested to see the list of all the 15 different dividend paying stocks currently marked to be showing a safe dividend, according to the article from SimplySafeDividends, and they are shown here for you on the screen, and along with their ticker symbol, their name, industry, dividend yield, and dividend safety score, which is kind of filtered for safe. Thank you so much everyone for watching this video until the end. I hope you found it beneficial. If you did get something of value from it, I appreciate if you give this video a thumbs up and subscribe to our channel. Here on Momentum Finance, we post weekly videos about investing, including investing in dividend stocks, growth stocks, and passive investing through ETFs. We also talk about ways to reach financial freedom. Thank you, and I hope to see you all next time.